This is a different kind of slide, but it's still within the same space. Okay, so the balance sheet is also called the statement of financial position. So you can see statement of financial position, you can see when you see balance sheet is the same thing. So it covers the moment, it's not a period, it's a snapshot of the financial health of the business. And it answers the question, what does the company own and what does it owe? And what is left for shareholders? What the company own, what it owes, and what is left for shareholders. The company is for shareholders, but the company is an entity on its own. So the company owns assets and the company has liabilities. What is left is what is we give it to the shareholders. So MTN at that moment, assets came up to 62.4 billion, liabilities 42.2 billion, and what is left 14.2 is for shareholders. All right, so let's proceed. So this is the equation for it. Everything a company controls was funded by someone. Everything that the company was funded by someone. It could be assets, no, it could be equity or debt. So whatever assets that you can see that MTN owns, is it the head office, is it the machine, is it the buildings, all the things, they were funded by someone or an investor. So the investor could be a debt investor or an equity investor. Investor or an equity investor. So that's why we always see liabilities plus equity. So the two put together is what the company owns or what the company controls. So for in the sake or in the line of MTN, this is 2.4 billion is what we see as the assets. And the two put together, 48.2, sorry, and the 14.2 put together gives us the assets. So as you can see there, 62.4 billion and 48.2 billion. Forgive me, it looks like I'm not very stable, but forgive me. 48.2 plus the 14.2 billion. So the two put together will give us the assets. Now let's break it down. So MTN, what MTN controls, the assets. So the towers, the spectrum, the cash, money owed to it, and the Momo float it holds in trust. So all of them put together, everything put together, 62.4 billion. Now to the liabilities. What outsiders claims on those assets? So the e-money holders, there's a fraction of the assets that is the MTN Momo float. So those who are the owners of those monies are the e-money holders. So they claim ownership to those assets. Okay, so the lessors, the suppliers, GRA, tax obligations, and so on. People who must be paid before shareholders see anything. People who must be paid. Those who have contributed to the assets of the business. Okay, so all the people that you owe. So if right now all Momo holders say they're coming for their money from MTN, it means the assets is going to decrease. Assets of MTN. MTN has that asset because nobody is saying bring it back. It is holding it in trust for consumers. So all the liabilities comes to 48.2 billion. All right. And the next line of the balance sheet is the equity. Shareholders residual claim. What is left over? What you actually own. So it's the assets minus the liability. Whatever is left is given to the shareholders. So the basic understanding is that all or everything or every property that a company owns or has control over is funded by investors. And investors come in two folds. Basically, they come in two folds. By giving equity or by giving debt. They are in between, there are other forms, but these are the main extremes, whether they are giving equity or they are giving debt. So the liabilities plus the equity form the assets. When the people that owe or that the company owes ask for their monies, when they claim those monies, whatever is left will be given to shareholders. That's the equity. That is why it is important to gain value. That is why it is important to have value on the business. That's why shareholders always look at the return on equity, the return, how much they are getting. Okay, if you are getting more, then they'll become happy investors. Now, let's zoom into the Momo float. So most of the discussions that we've had has been mainly on MTN mobile money or MTN. Okay, but we zoom into the Momo float. So zooming into the Momo float, we realize that 38.4 billion of MTN 62.4 billion balance sheet is not MTN's money. Again, 38.4. MTN has a total asset of 62.4. Out of the 62.4, 38 is not MTN's money. Okay. So the 38.4 is the cash sitting in customers' Momo wallets, you and I, the balances that we have on our or in our mobile money. 38.4 is a mobile money float. The same value represents the obligations to e-money holders. The same value represents the obligations to e-money holders. So it's 38.4 again. All right. So the net effect is that it doesn't belong to MTN. MTN is a custodian, not the owner. MTN is a custodian, not the owner. So it is wrong to say that MTN has 2.4 billion of assets. All right, it's bigger than when you say it's bigger than most banks. Yeah, you can say that, but it's wrong. 61.5% of those assets belong to Momo customers. MTN cannot spend a single cedi of that. MTN cannot spend a single cedi of that. It's for people, it's for customers. Okay, so what you have to do as an analyst is that you strip the float. MTN's real balance sheet is 24 billion of assets against 9.8 billion of liabilities. So you strip the Momo float, you strip it, like you take it out. So MTN's own 5-year summary, that's exactly this. So showing the total liabilities net of e-money. Hope this side is clear now. Hope this side. Yesterday, because I was rushing, I wasn't able to explain it to you. But this is the simple explanation to it. MTN has a total assets of 62.4 billion. Out of the 62.4, 38.4 belongs to mobile money holders. So technically, that amount doesn't belong to MTN Ghana or Scancom PLC. The real balance sheet is 24 billion, which sits against liability of 9.8 billion. Okay, let's move on. Now, yesterday we came across this term non-current liability. So basically, it's the long-lived machinery of the business. Non-current simply means will still be here in more than a year. Non-current, it will be in your books more than a year. Non-current. The current ones are within a year. Non-current, more than a year. Okay, so as you can see, total non-current assets, we are seeing property, plant and equipment, rights of use, assets, intangible assets, and other non-current assets. These are the components of the total non-current assets. Total non-current assets comes to 16.4 billion. Okay, this is quite straightforward. Now, in the balance sheet again, we have what we call the current assets. The current assets, the total current assets. Okay, so these two, of which only 7.6 billion is generally for MTN. Okay, so the total assets, only 7.6 billion belongs to MTN. So out of the 45 million, this is what generally belongs to MTN. So this is the breakdown. 38.4, as we explained, is for mobile money holders. The cash and cash equivalent is 4.2 billion. Then other current assets, 3.3 billion. So the two put together generally for MTN. We are breaking it down. So don't be confused with the numbers. I'm saying that assets, the total assets, okay, MTN has a total assets of 62.4, out of which 38 belongs to Momo holders. All right. Then we can say that 24 of the assets belongs to MTN. But when you break it down further, you have the current and the non-current assets. Okay, and we are saying that the non-current or the current assets, just 7 billion belongs to MTN. Total current assets belongs to MTN. You can look at these two. These are non-current assets. They are also assets that belong to MTN. So the property, well, we have to verify that is in the name of MTN. But from what we see in the books, all these non-current assets should belong to MTN. Then we are getting confirmation that for the current assets, only 7.6 billion generally belongs to MTN. Okay, so it's a combination of the cash and cash equivalent and the other current assets. So MTN own current assets, the cash other current assets, the total is 7.6 billion. That is what you can see on the screen. Now we move on to the liabilities, also a component of the balance sheet. So total liabilities as reported leads to real liabilities exflow. So this is the breakdown as well. Total liabilities, assets minus the equity. Okay, so 48.2 billion as reported. Now we less it against obligations to Momo, which is 38.4. So the real liabilities comes to 9.8 billion. All right, borrowings is zero. Now there's a component of the real liabilities made up of the lease liabilities, trade payables, tax provisions, etc. 9.8 billion. Okay, so the year-end component of the liability, borrowings is zero, cash 4.3, net cash 4.3, debt to equity is zero. Okay, so this is the breakdown of the liabilities. We keep saying 38.4 belongs to customers of mobile money. The 9 million left is represent the real liabilities. So that means, sorry, 24 billion in assets against 9.8 billion in liabilities. Now we move to the equity. So the stated capital. Okay, so this represents equity, what is owned or what is left for investors, for shareholders. What is left for shareholders. So the component of the total equity, we have stated capital, which is 2.2 billion. Money actually paid in. Okay, so this are the 2018 IPO through scrip dividends. Okay, so this has been unchanged since 2023. That means From the IPO, most of the cash has remained in the company as stated capital. Okay, we have other reserves 629 million. Sorry, integrity capital reserve 14 million, retained income 11.3 billion. Okay, so these are the components of the equity. The total equity 14.2 billion. Shares in issue 13.2 billion. Book value per share. Book value per share is 1.07 is 1 cedi 7 pesos. Market price 6 cedis 44 pesos. Price to book ratio 6 times. This is a summary of the balance sheet. So there's a full balance sheet as we've been discussing. These are all the components of the balance sheet. So everything that we have discussed is in there. We've made it, I think we've made it very easy. Very easy. You don't have to shiver when you see stuff like this. They are all very easy to understand. And actually we are giving you this basis so that you can build upon it. Okay. We'll be looking at how the three interconnect or the three interrelate. It is very important that you understand it so that if you are not an accountant or you don't do accounting, you don't read accounting, you can easily understand how they interrelate, why some of the figures appear in the various statements. So please don't run away from the YIAP. Yes, don't run away from us. We are here to help you. So I'll pause and take some questions. I'll pause and take some questions. Any questions? Sesi Kuwonu. Sesi Kuwonu. So we mentioned that profit is just an opinion, cash is a fact. Let's go through. Profit is not the same as cash. MTN booked a profit of 7.8 billion. Not all of this represent cash. It's a cash statement exposes the quality in the business. It funds everything. It's the cash. It shows what is actually in the bank. It's not. It's very hard to manipulate. Whatever is in the bank represent the cash flow of the business. Okay, so I explained that there are three sections: operating activities, investing activities, and financing activities. Operating activities, investing activities, and the financing activities. Operating activities is the cash from running the business. The cash from running the business. So customers pay airtime, data, momo fees, and so on. Investing activities, cash spent building the future, network, equipment, IT systems, etc. Financing activity, cash to or from capital providers. Cash to or from capital providers. So when there are borrowings, when investors borrow to the company, it is recorded there. When MTN pays out its debt obligations, it is recorded there. Lease payments, dividends, and everything, financing activities are reported there. Operating activities, financing activities, investing activities. All right. Then we come to the breakdown of the operating activities. Okay, so profit plus non-cash items. You take out the changes in working capital. Then we also take out the taxes and the interest paid. All right, so this is a breakdown of the operating activities of the cash flow statement. So start with the profit before tax, add back depreciation, amortizations, net finance costs, net is the net of the finance, so all the ins and outs. You pay your debt, you receive interest payment, pay debt, all this dividend payment, dividend received, everything is captured there. So operating cash flow section. Continued operating activities continues, working capital movement, income tax paid in cash, interest paid. Okay, so everything, as I mentioned, captured in the operating activity. The net cash from operating activity for MTN, 7.6 billion. Investing activity, the next section, investing activity, where MTN deploy cash to build future capacity. All figures in the annual report. So X lease capital expenditure, spectrum licensing, right of use, total IFRS 16 capex 16.4 billion. These are the components of the investment activities for MTN. For other companies, there could be some additions. So we'll look at, I promise that I will be looking at some of the banks. We'll look at one bank, we'll look at one manufacturing company that we of all the sectors, at least you have an idea of all the sectors. Next week, after we've gone through where each of them link, the next day we move straight to the banks. We'll pick one bank. Probably we'll look at, let's pick GCB. Remind me if I'm doing something else. Okay, so that we can be able to understand all the structures. So when you understand a manufacturing company, you understand a bank with this MTN structure, I think the rest of them we can be able to go through them. If we have time, we'll pick one insurance company to go through. Time, right? So I think all depends on me. I need to move fast. And so far as you understand, I'm also very good. Now we come to the free cash flow. Free cash flow. I mentioned that the basic formula is to take out your capital expenditure from the operating cash flow. When you do that, the rest of the cash is free cash flow that can be used to finance activities. So as you can see, you reduce it by the capex components, then spectrum and leases. Then you come to your free cash flow. That's the basic. But I also mentioned that we're going to go into detail of how to calculate free cash flow in relation to DCF valuation. Relation to DCF valuation. So it's likely that within next week we will make a lot of progress when it comes to this program. I wanted to use about maybe 2 months to finish this whole program. So but let's see how it goes. Now let's move on to the next section, the financing activities. So cash flowing between MTN and the capital providers. Okay, this one mostly captures the outs, which is a sign of maturity. So dividends paid out, lease principal payment out, borrowings, they are not borrowings. So this is the financing activity. But in some companies, they receive, maybe they have shares in some other companies, so they receive dividends and some bond holdings and stuff like that. So when those financing activities go on, you get interest payment, principals, and so on. So all those will be captured under the financing activities. Now, it has become very easy for you guys. So now I'm not even going deep. So the cash reconciliation, operating activities, as you can see, cash and cash equivalent as at January 2025. You take out the investing activities, financing activities, then the net cash and cash, whatever is left is the cash and cash equivalent. Net increase in cash is 1 billion. Okay, the cash reconciliation. Now let's look at profits versus cash, the comparison. Okay, so headline number, PAT, profit after tax 7.8, operating cash flow 7.6. You take out depreciation in the income statement, you add back because it's not cash that has been deducted. Taxes, we charge it. For the cash flow, you actually pay it. Capex is not very visible. D&A, they are not really money. And for here, for the cash flow, if it is investment made, you pay it out. It is seen in the cash flow statement. Dividends, not really very visible in the income statement. but in the cash flow, you see it. If it's received, you see it. If it's paid out, you see it. All right. So these things are captured very visibly in the cash flow. That's why we always advise analysts that in case you don't have time, you have to make a summary decision on a company. The first statement you pick is the cash flow statement. Take it first. You have 30 seconds to make a decision. You pick that one first, look at it. Maybe look at the cash cash equivalent, look at the trend, how it has been in the last 3 years, the last 4 years, last 5 years. How is it? Is it growing very good? Then you make a decision on the company. Basic. You don't go to the income statement to make a decision. That will be suicidal because not everything in the income statement is cash. Now, some of the ratios, we look at some of the ratios. We'll go deeper into these ratios as we progress. Then I think that is it. Tomorrow we are not meeting. Tomorrow we are not meeting. So that will be it for now. For the income statement, we looked at it for more than 3 times already. So we don't want to go back to it now. We'll go back to it in the analysis when we're analyzing the bank and the manufacturing firms. Okay, and I mentioned that if we had time, we will look at the insurance company. By the time you're done with this program, I can promise you would have known and learned a lot. All right, so thank you all very much for joining. I would like to take questions. Samson, I'm welcome. Please, you can ask your question. Something.